Hi, I'm Otto Dargan from homeloanexperts.com.au, and today I'm going to go through some things for you to consider when taking out a repayment holiday or home loan payment deferral during the COVID-19 pandemic. Firstly, you're still charged interest. The interest isn't waived, it adds onto your loan every month, and so this is really only something for people who are struggling financially. Secondly, do you have available redraw in your home loan? Many people have paid extra off their home loan, and you can see this in internet banking if you look at available funds. Firstly, you can actually withdraw those extra repayments and you can use that to live off or to make the repayments on your loan. So you may not need a repayment holiday, but secondly, if you take a repayment holiday, you may be unable to access those extra repayments that you've made. So it's important that you access those first and then apply for a repayment holiday second. Thirdly, your repayments will actually increase after the end of the repayment holiday. This is because the balance of your loan has gone up, but you still need to repay the loan by the original term. So the lender increases your repayments to do this. It's usually only a small effect, and it does vary between lenders. So some lenders like CBA will actually extend your loan term so that your repayments remain the same. Next, you'll actually end up paying more in interest over the term of the loan if you take a repayment holiday. It's a complex calculation, but it's generally thousands of dollars. So again, you really shouldn't take a repayment holiday unless you do need it. Fixed rates are actually well below variable rates at the moment. So some borrowers are choosing to switch to a fixed rate loan and then apply for a repayment holiday. By doing this, it means that they're on a much lower rate during the holiday, and so less interest is added onto their loan during that time. This again, you need some advice around this because fixed rates aren't for everyone and they do have some restrictions. There are other options to consider aside from just a repayment holiday. If you've lost part of your income, but you still have the majority of it, then you may want to consider just switching to interest-only repayments for a year or two, and that way then you don't need a repayment holiday at all. If you still have your full income at the moment, then you may want to consider just refinancing your home loan and maybe consolidating any debts that you have, and that will reduce the size of your repayments and get you a lower interest rate. Lastly, you may want to consider accessing your superannuation early. This is a bit of a dangerous option because by accessing your superannuation, you're actually affecting the balance that you're going to have at retirement, and this can be a significant effect. So if you are going to do that, make sure you get some advice first. You should also consider your long-term plan because the repayment holiday will last for say 6 months, but you may be out of work for significantly longer than that, or you may have a reduced income. So if things are bad, then consider selling your car or renting out your property and moving in with a relative. Or if things are really bad, then consider selling your property. Your credit file actually won't be affected by taking a repayment holiday, and this is because the banks and the government have decided that this is an extraordinary event and people's credit files shouldn't be affected. That being said, you may get a default from not paying an electricity bill or something like that, and this may affect your ability to borrow in the future. Once you've had a repayment holiday, lenders are unlikely to lend to you right away. Lenders generally want to see that you've had a 6-month perfect repayment history before they'll lend more money to you. Lastly, talk to your lender or mortgage broker before you take a repayment holiday because they're not for everyone, and it's just important that you understand the risks, you understand the costs, you understand the other options, and that it is appropriate for you.